Hey traders, this is Christian from Hertz, Tribeca Trade Group with your macro review as well as the week ahead. Going into next week, which is the 15th. So I usually start this from the top down in terms of S&P charts. I'm going to go over the S&P chart in 1 second, but I think one of the themes of the week that we saw last week in option activity was some really good earnings from Alibaba and a run into earnings and then a run after the earnings report in Alibaba. And then we also saw a lot of bullish activity in names like Sina, JD.com, YY. So all of this this whole group was on fire last week. So is there an ETF in this space that you can play? There is an ETF. It's KWEB. This is the China Internet ETF, a really interesting looking ETF. And if you look to see what's in this ETF, it's all of those offenders that we just talked about with Alibaba, Baidu's in here, JD, which we saw a lot of bullish activity on Friday. We saw a bullish risk reversal, so calls were bought, puts were sold. In this particular name, we also saw a lot of activity in this YY, I'd say midway through the week, and Sina bullish activity in the beginning of the week. I think we also saw a lot of, a little bit of activity in NTES. So let's just look at the chart of this whole group. It is a little bit overbought. You can see on the RSI right now, so that's the bad news. Is it's a little bit overbought. It's an 80. It's actually a lot overbought. It's an 80, 81. Is that on an RSI? So it does have an upside target. That I would say of 3877. That is a version point of control, a point of control that's never been touched before. So that's what I would be looking for this ETF, and also possibly, I think buying this on a pullback is the way to go right now. You can see this on the weekly chart too. It looks pretty good. I'd say upside target right now, top of value 39.48 for this group. But I think you have this really big green bar for last week as it moved pretty heavily to the upside. So a little bit of a pullback, I think, is a good place to buy. So that is a name that's on my watch list. So now let's go ahead and we'll talk about the S&P, and we'll talk about my weekend newsletter. I remain right now cautiously bullish. I think that, on the negative side, last week we had a couple disappointing economic reports. We had productivity report, and then on Friday we had retail sales that disappointed. You kind of take the good with the bad with this. The bad thing is that, the economy seems to be, and I've been saying this a lot lately, but one step forward, one step back, where, we saw a nice jobs report, but then last week's data was bad. So maybe, this week, a couple things to watch: housing starts and CPI. That's out on Tuesday. We also have Fed minutes on Wednesday. The positive of the bad economics is that the stock market remains kind of in a sweet spot where, we do see names that are beating earnings. Not, of course, every name in the S&P, but there are some areas that, especially in technology, a couple in the retail space where they are beating expectations. And we do not have a big probability of a rate hike right now. So that's the sweet spot that we're in. If you look at Fed fund futures, I believe it's in the teens, lower teens for the probability rate hike in September. Only 16% Fed fund futures are implying in terms of whether or not there's going to be a rate hike in September. And then if you go further out, it's still not at 50% until March. So, I think the equities can continue to grind higher when there's no rate hike in the near term. Not to say we can't have a pullback. So one of the things that I'm watching is, I'll always run a scan to see what sectors have an RSI greater than 70, meaning it's starting to get a little bit overbought. So some of these groups are the technology group, semis, technology, emerging markets, which I'm going to get to, retail, RTH, and EWG, which I'm also going to get to as well. Also, FXI is in there. So, before I go on to the rest of the video and the rest of the summary, the VIX is an 11.55. So while I think we can grind higher, we haven't really had a decent pullback in a while. I think it makes sense to own some type of S&P puts, Qs puts with as the VIX is so low right now, it's the cheapest, it's been the cheapest probably in about a year to buy protection. So you want to do this while it's cheap and not once there's a spike in volatility and you're like, oh geez, I need to have some type of hedge on. So if you have a long portfolio like I do, having some S&P puts or Qs puts, I think makes sense in this environment. And as always, I continue to look for big call option activity in a particular group, or just like we saw in a lot of those China internet names last week, and buying in a lot of semi space in the U.S. is basically what the trend has been: semis and technology the last couple weeks. Okay, so I want to just get to an S&P chart. There really hasn't been much that's changed in this. Let me just go to the daily chart. The RSI is not into overbought levels right now. The area that I'm watching is, let me just bring up S&P futures. I want to do it this way. S&P futures, the area that I'm watching is, I don't know why my chart keeps flipping around like that. Is 2171.25. Last week we touched this area a couple times. Wednesday we had small pullback day, but we reclaimed it. So we're hanging above value. That's the red line on my charts. So I'm staying long basically the market unless we get a breach of this area. So we're getting a couple days where we basically have chop, or I'd say maybe more than a few days of chop, and then we are moving up. So while the trend is upwards, I think you have to stay with it. You just have to be a little cognizant of some areas that are getting a little bit overbought. So let me just go back to the newsletter. Just quickly, performance last week, oil and gas names did pretty well. One area that cooled off last week is XME, down 5%. I'm going to get to that chart in a minute as well. But you also see, with the S&P just inching up last week, up less than 1%, look at all the international names that are really moving here. So, in last week's video, I talked in depth about emerging markets. In terms of ETF flows, still just huge inflows going into emerging markets. $2.7 billion. Previous week was $1 billion. I think it's been about 5 or 6 weeks of steady emerging market inflows. And it's also 7 different ETFs that made up this number. So it's not just EEM that's attracting inflows. It's EEM, it's VWO, it's IEMG, it's EMB, which is emerging market bonds, EEMV, DEM. So just a handful of names. So what that tells me is that it's not just one buyer, it's multiple buyers that are going into emerging markets. So I've been long emerging markets for probably over a month at this point. I'm getting a little bit worried because on Friday they mentioned on CNBC they mentioned emerging markets 3 times. And usually once everybody starts talking about it on CNBC, it's kind of a contrarian indicator. You want to start taking profits. So looking at the emerging markets chart, I've got a couple price targets. I've been taking profits in my long swing trade. A couple things here. You got a VPOC above, so 38, right around 38.50, 38.60. That is really where I probably want to be taking a lot more of that trade off. And then maybe keeping a little bit on for a move all the way to the top of value. But you could see it's starting to get overbought. It's a 70 now RSI on the daily chart, but it's been making this nice move above this trend. And I do want to see this thing through if it can get to, all the way up to 41.30. But meanwhile, taking targets all the way through, as at some point, it's probably due for a little bit of a pullback before it reaches here. Okay, next. So what other flows do we see trends this week? We saw a lot of money coming out of short-dated treasury ETFs. They actually lost about $568 million in assets. Again, I always look for more than one of these that money is coming out of. So money came out of all 3 of these. And the trend for last week, $11.4 billion. So inflows really picked up into equity ETFs last week. And that came across in multiple sectors: REITs, tech, materials, industrials, healthcare. Also, about half $500 million in inflows apiece. So really strong inflows going into U.S. markets. And then also, one thing I find particularly interesting is, all year long, Europe and Japan has lost assets. And it's been roughly, I'd say, on average, probably about $600 to $700 million of outflows every week. They actually died down a little last week. So we didn't see inflows into Japan and Europe, but at least it appears that they're slowing down. So kind of a contrarian indicator here. When these outflows stop, you don't necessarily need to get inflows, but I'm going to talk about EWG in a minute, the Germany ETF. I think that's pretty surprising. And then the final thing I'll talk about flows is that GLD actually had a large outflow on Friday. So money's coming out of this metal space a bit, something to keep an eye on. So first thing I want to talk about in terms of charts of the week in ETFs is SMH. NVIDIA had great earnings last week. We've seen a number of names in the semi space that are really on fire. However, we're getting pretty overheated now. So the RSI is 73. Relative strength index is getting a little bit overbought. And look at what the move has been here. So, number one, this is a great breakout, and I've been long various different names. I'm still long Applied Materials. I'm actually long Cypress, which is one name that's not working out right at the moment. But, I do like the space. However, you just have to be cognizant of how far this has run from the top of value up. So I actually like, I'm probably going to stay long Applied Materials until they report earnings, and then I'll reposition that trade, as I think the Applied Materials chart looks great. But I think, what I'm looking at is possibly on Monday selling the SEP 6668 SMH call spread and collecting some premium here, as I think it's due to come in a little bit. And, normally once a sector ETF goes outside a 2 standard deviation Bollinger Band, this is great while you're in it. You want to ride this, but it's been going on for about a week where it's been outside of a 2 standard deviation Bollinger Band. So I think it's time to maybe put on a little bit of a defensive trade in this group. Not to say that we can't continue higher, but I think we're due for a pullback. Next thing I wanted to talk about was, so I've got a couple short trades or a couple ideas to either sell premium. IYZ, this was a trade that I put on mid last week, and it really started to pay off quickly here. Telecom has been one of those defensive groups, and it's been an area that people have kind of flocked to, but I think it's really breaking down here. So I did add a trade, a September 33 put on last week. It's already in the money. I actually took one profit target, but I want to hold this until it gets down to 31.60. So, names that are in this, Verizon and AT&T have a big weight in this. What's also surprising, when you look at the dividend yield, it's, XLU, obviously kind of a name in a similar defensive type space, but XLU has a much higher dividend yield of about 3.2%. You look at IYZ, and it's a little bit surprising to me that the dividend yield is only about 1.7%. So, I don't see a real need right now to be long a defensive group, as I think we're seeing a little bit of a rotation into some riskier sectors like technology, consumer discretionary, maybe industrials, and maybe a little bit of healthcare that's going on right now. So I like a short in IYZ. Again, I established that position midweek last week, but I'm going to stay short this, and hopefully we see a move down further. And then EWG, huge week last week. Nobody really talked about this, in the financial press. The DAX was up 3.9%, and it's making a nice move here. So something that's, taking a look, doing a little bit of technical analysis on the weekly chart. And what you see is a couple things here. It's moving into the yearly value area. So, I want to make sure that this stays in value before I go long. It's also a little bit overbought on the daily chart. It's gone into value before, and it's failed. So it did have a moving average crossover, back here. What was this? April. It got into value for a couple weeks, kind of stayed here and then sank. So I want to see that it gets over this level, maybe returns to value, and then I'm going to look for a long swing in EWG if it maintains. I also like the fact that it's firing off a buy signal on the Raptor indicator as well. And then the last ETF that I'm going to talk about is, metals and mining. U.S. Steel had a big secondary offering last week. This group has just been on fire this year. It's up 83% year to date. There's some gold miners in this ETF. There's also some steel names. So you could actually still, if you're looking to for another area to sell premium, I think you could still do that in XME. A good place to do that was probably about a week ago. before US Steel had the big secondary, but you could see that it's gone all the way through the value area and paused here at the top of value. So, if it climbs back above, maybe that's a time where you would want to, look to re-engage for a long, but I think that it may continue to pull back here a little bit. So that's what I'm watching. A couple of trades that I have my eye on are going to be a long swing in EWG, but I'm going to be patient on this, waiting for a pullback. And then on Monday, I will probably establish a synthetic short. So essentially selling premium, selling a call spread in the SMH ETF. So that's it for the weekly video. Have a great weekend, and I'll see you on Monday. Let me just, one other thing, if you want to receive our text alerts for swing trades, we just restarted a program here, and it's a swing trading program. You can actually purchase this at $69 a month. If you want to try this out for an introductory rate, there is a coupon that I'm offering. Of course, this is on our Tribeca Trade Group website, www.tribecatradegroup.com. You can go to products, and option swing program is what you want to do. And the coupon code that I have for you is basic 50 off. So all caps, BASIC 50OFF is your coupon code, and you can get the first month for half off. So try it out. We actually started a trade on Friday, which I will go into if you go ahead and purchase and get involved in the program. So thanks again for watching the video, and have a great weekend.